get Amnish Aggarwal. He's our guest for the day. He's the head of research at Prabhudas Lilladher, who joins in now. Amnish, good morning and thanks a lot for joining in. First, I wanted your thoughts on Bajaj Finance. The numbers look pretty good. The AUM growth was solid. The asset quality was stable. The management maintained their full year FY24 growth as well. But from a stock perspective, what's your view now?
Yeah, good morning, Sonia. You see, Bajaj numbers were good. The company continues to maintain high rate of growth. The only thing is that there has been some increase in the, you can say, NPAs. But having said that, the company, you can say, continues to deliver. It continues to look good. The only thing is that in the longer term, structurally, the price to book value can't be more than, say, 5 times or so. So I think from here on, the stock will give you more structural returns in a very gradual and steady manner.
Amnish, hi, good morning. I hope you heard that conversation with Shailesh Chandra of Tata Motors. And the part that we played out is a longer piece, but the part that we played out was the fall in entry-level hatchbacks, etc. And he clearly said players focused on that segment should be worried. Just briefly, what is happening? Is the demand curve completely moving up to, or people have generally more money, so they're able to buy higher, more expensive cars? Have costs gone up in any case? I mean, very few options available in that, under 6 lakh category. How would you look at this?
Yeah, hi Prashant. So, you see two things. If we look at your PVs as a standalone segment, then I would say that definitely there's a move towards SUVs and UVs, and that is very clearly reflected. Even a player like Maruti is now looking and gaining more share in that segment. So whatever the representative from Tata Motors has suggested, definitely there is a structural shift which is happening from, you can say, hatchbacks and sedans to UVs. Now, when it comes to, you can see your broader question that people are buying more premium, more expensive cars, or maybe say, if I expand it to more like the entire consumption basket, then one trend which we are clearly witnessing now is that whether you can say, and it is all across, whether you can say beauty products, whether it is retail, whether it is jewelry, everywhere, that the upper segment and rich segment in the country, they continue to spend. The premium products today in every segment are growing faster than the entry-level segment. Now, to us, it also gives that it is not a trend which is only visible in case of auto, but it is visible across the board, whereby the upper class, rich class, they continue to spend, whereas maybe at certain point, the lower to lower middle segments of the population are under some sort of an inflationary pressure. So I will not go into, say, rural and urban, because that class is there in both rural as well as in the urban India.
All right. Hi, Amnish. Good morning. Amnish, you give us your view on Bajaj Finance, but in terms of positive earnings overnight, we had Canin Homes, and my colleague Abhishek just told us that their NIMs came in at multi-quarter highs, I think 6-quarter high of around 3.8%. Your view on the stock? It's positioned well because it's dealing with the housing space, the housing theme. But how do you view the stock at these prices?
You see, we have been structurally positive on Canin because, you see, ever since now HDFC has got merged into HDFC Bank. Now in the housing finance space, there are very limited number of stocks, and Canin Homes is even now relatively, I would say, in terms of price to book, it is not expensive. Yes, there have been some concerns on NPAs or some one-time write-off which can come. But otherwise, I think the stock still seems to be very decently poised. And given the inexpensive valuations it is trading at, it will give you, I would say, very steady returns from here on also.
Amnish is still with us. Amnish, thanks for waiting. Yesterday, the standalone refiners saw very large moves. Chennai Petroleum, MRPL. Do you have coverage on this space? We also, by the way, had a fund manager who was saying, well, maybe this is the time to get into some of these names. These are highly cyclical, as we know. For example, last year, MRPL, I was just saying this yesterday, started the year at 40, went up to 130, and closed at 55 rupees. So you've got to get this right when they're sort of starting to rise. I don't know if that's the time now. Some believe so. Your thoughts?
You see, like you said, that they are highly cyclical. When your refining margins go up or in anticipation of that, the stocks usually make a move. So I think at the current juncture of 112 a stock, which has started at 40, I think we are now maybe looking at last 10-15%. So we have a coverage on this. Our target is around say 94 rupees. Okay, so I think at 112 rupees, I think most of the steam in this stock is over unless until you are anticipating that the margins will continue to move up and the stock can give you something like your, you can say further short-term returns from here. But definitely these are not, I would say, the stocks one can bet on a very structural basis or from a portfolio perspective.